Bank of America is now issuing a major warning to all Americans. They are now telling people that when the Federal Reserve decides to start cutting rates, that is when we should be selling our stocks. But why? Why are they coming out and giving us this massive warning right now? Well, I'm going to address that in today's video. So make sure you stick around and watch this entire thing, and I'll explain exactly what is going on. But all I ask is one thing. It takes 2 seconds. Go ahead, hit that like button if you enjoyed these daily updates. And now, let's begin. So this is not a joke. Bank of America, look what they put out. They put this out just a couple of days ago. It says, Bank of America, sell stocks when Fed starts rate cuts. That's what they're telling us. That when the Federal Reserve decides to start cutting rates, that is not the time to get excited and think that the United States is turning around and our economy will be booming in the matter of days. It's going to take some time. But why? Well, let's get into this article. I want to explain what is going on. Look at this right here. It says, Bank of America suggests selling stocks when the Federal Reserve starts cutting interest rates, as there's a growing chance the U.S. economy might slow down sharply. Now, why would the U.S. economy slow down sharply once the Federal Reserve begins cutting rates? It's simple. When the American people, the U.S. consumers, start to see that the Federal Reserve is cutting rates, and they're cutting it at a 25 basis point rate drop. That's what they're doing. Those are the increments, 25 basis points per time. Here's the issue. According to experts, it could take anywhere from 100 to 150 basis points of rate cuts before we see any substantial progress. So if you are thinking about buying a house, buying a car, going to get a new credit card or something like that that requires a loan, you might be considering it now that we're going to see rate cuts. But experts are predicting we are not going to see anybody actually go and do this, go and get a new loan until rates come down substantially. Let's keep reading this though. It says this advice came from strategist Michael Hartnett after U.S. stock indices like the S&P 500 or SPY dropped following a jobs report that showed a big slowdown in hiring. Plus, the ISM manufacturing PMI fell for the 4th month in a row. Okay. Now, what he says is interesting. Now, I want to read this. Look at this. It says, Hartnett said, it's a good idea to sell after the first rate cut because the risk of a hard landing, a recession, is rising, even though many fund managers expect the economy to have a soft landing, falling inflation with no recession. That's what a soft landing is. Falling inflation with no recession. As of right now, there's a good chance we see rising inflation. That's the problem. Okay, we're already seeing unemployment going up. Goes on and says, he noted that the connection between job growth and manufacturing activity is a warning sign. The only other time manufacturing contracted without job losses was from September 1984 to April 1986. July's jobs report showed only 114,000 new jobs, much lower than 178,000 that were expected. Now, here's where things get interesting. The Federal Reserve is going to start cutting rates. We know this. It's likely going to happen next month in September. When they do this, it's likely going to be only 25 basis points. And experts are predicting that people are going to wait. So if interest rates are going to come down to, let's say, 5.5%, okay, right now it's 5.25 to 5.5%, okay, but again, that's the Federal Reserve. Those are the federal funds rates. But if interest rates on buying a house comes down to like 5.5%, 5%, 4.5%, right? If we see the Federal Reserve is continually coming down and there's a rate cut next month and then a couple months after that, or let's say 2 or 3 before the end of 2024, if you were smart, you wouldn't go and buy at the very first rate cut. That is when you start to really consider it. But you wait until the 3rd, 4th rate cut where now you're saving a whole percent. If that's the case, That's why experts are worried that we are about to see an economic slowdown where people have been spending, but now that the Federal Reserve is potentially going to cut rates, and there's a high probability of it, then they may decide, you know what, I'm going to wait. I'm going to wait until January or February to where I can get a better rate, potentially get a better deal altogether. I can save a boatload of money. That's what they're considering. That's why Bank of America is issuing this warning, saying that we are far from a booming economy. Now, the last thing I want to leave you with is people are likely going to start selling stocks. They're going to sell stocks for Amazon and Google, Nvidia, Microsoft, Tesla. We're going to see a lot of the Mag 7 sell off. But here's the thing. People are going to start moving their money out of technology, potentially into other sectors. Now, which ones? Well, that's all up for speculation. But here's what I know. I know we are going to see a massive change. We're going to see a lot of these technology stocks sell off. And it's not just because they're a bad deal or these companies aren't investing back into their own business. It's because there's just a change. That's it. Just a change. Now, I'm not here to give you financial advice. All I'm here to tell you is what Bank of America is telling us is that they're worried that the reports that have come out over the past several days are just a warning sign. These are the flashing red lights telling you that we have some issues upon us. Now, what does that mean you should do? Should you start selling all your stocks? I'm not. Am I going to be buying? Yeah, most likely, at the right times. But here's what you need to understand. If you are going out there and going into debt right now, that's probably not the best thing to do. If you're going to go and buy a new car, well, if you're paying cash, maybe you can get a good deal. But if you're going to go and finance it, well, you might overpay. It's probably not the best time to go and get anything on loan, especially a house, a car, even credit cards. They're probably a little bit high. So just be patient and be ready for when interest rates start coming down, which everybody expects it's going to start in September. But that will just be the beginning. Most likely December, January, February, March, we are going to see some major changes. The other thing you need to look at is who is the next president going to be. Right now we have two main options. Vice President Kamala Harris for Democrats, and for Republicans, it's former President Donald Trump. Who is going to be the best thing for you? The best thing for the U.S. economy? The best thing for the United States? Well, I'm not going to give you my opinion. I'm just here to tell you that you need to decide who that is and what our economy is going to look like. So I will leave you with that, but just understand right now there's many big businesses that are saying that there is a massive warning. There is a massive issue coming, and most people don't see it. So we'll see what happens in the near future. The one thing I can promise you is I will be here every step of the way, and I'll fill you in on all the latest news and updates. But as of today, that is what we know. So again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.